Welcome to Fomo Consulting for your daily AMC stock analysis video on Tuesday, August 3rd. Ladies and gentlemen, what's next? What could possibly be on the horizon that we haven't already faced? And as always, the apes are winning, the diamond hands are winning, most importantly, the retail investor is winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It's a newer channel, and I would appreciate the support. Getting into the video. Thank you as always to each and every one of you who has liked, shared, commented, and subscribed. It means the absolute world to me. Thank you very much. Start with a quote. Belief should make way for facts. There's a lot of misinformation out there, a lot of DD around what's going on with AMC stock. There's analysis that just doesn't add up. A lot of math that just quite frankly doesn't add up, but I'll leave that up to you to decide what to believe and what not. But at the end of the day, facts always tell the truth. So, quick reminder again, earnings 5 p.m. Eastern, Monday, August 9th. Could be a major catalyst. We shall see, because we certainly need one. Broader market today started off a little iffy, a little concerned around the early morning performance, but for whatever reason, everything bounced back quite rapidly mid-morning and never looked back. So overall, S&P was up close to 36, Dow up 278, huge day for the Dow. NASDAQ up 80, and Russell was up 8. And we kind of felt the effects of that end of day, as you will see very shortly. But overall, big tech, blue chip, for the most part, decent day, if not overall flat. Amazon had a good day. Google, as you can see, Apple, Disney was a bit down, Netflix down, Facebook down. There's a lot of concern in the broader market, and I certainly agree with it, around the Delta COVID variant, what's going to be the future. I know a lot of the recovery plays are certainly kind of on shaky ground, whether it's vacation type stocks, airlines, cruises, things of that nature. Overall, we'll see, but there's a lot of jitters in the market, but earnings pretty much was the main driver today, it would appear. Crypto, overall today, crypto a bit down. Bitcoin still holding around that 38,000 level. Pretty impressive. Doge is down just a bit, right now at 19, where it's been settled in for the last 2 or 3 weeks. Overall, not too terribly concerned, but again, a down day. We'll see what tomorrow brings. Options always lead the path when it comes to AMC stock. We are currently right around that 33, 34 range. As you can see on the put side, there's an awful lot of consolidation at the $30 strike on the put side, over 20,000 open interest, and for the call side, a reassuring 19,000 in open interest at the $40 strike, and as well as the put side. So it'll be interesting how the rest of the week plays out. Certainly a lot of spread between the calls and the puts this week. We'll see who wants to win the most, right? So IWM, as you can see, just like the Russell 2000 chart below, mirrored exactly. Sell off in the morning, bounce back, and then pretty well ran up through the rest of the day very, very slowly and incrementally. But AMC certainly felt the effects of that, as you'll. So AMC German apes, well done. Had a red day, no different than us. 28.30 euros is where you closed, down 6.69%. The chart, as you can see, relatively similar to our chart here in the States. Overall, we'll see what the future holds, but a red day nonetheless, right? So let's look how we did today. We closed at 33.59, down $1.61, 4.57%, up a bit after hours. At least the time of this recording, will probably ebb and flow around the closing price. And as you can see, the Russell 2000 chart versus AMC almost identical. Had the big sell off in the morning, kind of found some consolidation midday, had the nice close, a little bit of buying pressure. Obviously, GME had a huge run up. Today was just, we're tied to the broader market without a catalyst, without substantial volume. We're just tied to the broader market. I don't really have any other thing else to say around it, but you can certainly see For the first time in probably a week, we have actually been in the top 10 on volume, at least according to Webull, which is reassuring to see. Overall, next week should be a very good gauge as to where exactly we are with this stock. So let me show you again the overall trend over the last 4 earnings reports. You can kind of see where we were a bit red, a bit flat leading up to earnings last year around August, and they had the run up shortly after earnings. Yet again, bled down quite substantially in November, had a nice little pop shortly thereafter. Had a few red days, kind of bled down, had earnings in March, had the shoot up to $14 or so. And then obviously in May, we did the same thing, had the several red days in a row, I think it was 8 or 9. And then we had obviously the big run up late May, early June. So there's a pattern to these things. And, I wouldn't be surprised if the rest of the week is not either consolidation or red. We might even touch 30. Not sure, but I'm really looking forward to earnings and getting past that to see how the stock performs based on new information, right? So the last 5 trading days, as you can see on the 5-minute chart, certainly nothing to write home about. We found a bit of support right around that $33, $32 level, which has actually historically been a very strong support for us. So as long as we hold that and we can bounce, if not hold, for the remainder of the week, I will be happy. So on the 2-hour chart, as you can see, we've bounced off that $31, $32 level multiple times over the last month. We've been here, done that, but holding this is absolutely essential. Again, this 2-hour chart, the fact that we hit that low and then bounced a bit is reassuring. But, if we break 30, I have no doubt we'll be down probably back into the mid-20s quite rapidly, in my opinion. But we need to really hold this, ladies and gentlemen. Again, on the daily chart, as you can see, we have back in late May, that level was actually a bit of resistance. We certainly have turned it into support more recently over the last month. On the daily chart, we've bounced off it 3 or 4 times. We need to hold it. It is absolutely critical. It's very, very strong. But again, hopefully we will not break it, because if we do, in my opinion, we will end up in the mid-20s pretty quickly. GME had itself a relatively uneventful day for the most part. It was red, beaten down, no different than AMC, got to a low of $148.21. Slowly just kind of consolidated again on lower volume. And the last, 30 minutes, it had a huge run up, which was absolutely amazing to watch. And then obviously it sold off right at close. But again, it's nice to see a little life in a GME. So XELA, I know it's a social media stock. It actually had a fantastic day today. I kind of watched it on and off throughout the day. Had a beautiful run. There are some fundamentals behind the stock. Do your own DD, your research, but it'll be interesting to see what tomorrow brings with this particular play. And Robinhood had one heck of a day. It was actually up over $10 per share at one point in time. To my understanding, Kathy Wood bought in, so that might have been the catalyst. Everyone else jumped in shortly thereafter. Only time will tell what the actual value of this stock is. We'll see how it performs tomorrow, see if it sells off or if it continues to run up or hold. But it'll be interesting to watch this play over the next week or two. So we are currently at 41.44 days average age of short position. That has gone up about 3 days on average, which is interesting. And the short interest is pretty well flat day over day. Nothing fundamentally has changed other than the price has been pressed down yet again, mostly due again to the broader market. So let's look at the short interest. 1.1 million shares were borrowed today. So I know some, let's just call it commentators, YouTube, social media, they keep using the manipulation or short ladder attacks and all this different stuff. In my opinion, that's not the case. As I've shown you, the IWM, the The Russell 2000, AMC is tied up in 34 individual ETFs last I checked. So a down day really does pull it down, especially on lower volume. But again, it's being either held up or pulled down by the broader market, typically without lack of a catalyst for us to separate ourselves from the pack, right? Utilization is holding around 90, 91%. Cost to borrow, not much change. Shares on loan, about the same, about 98 million. The most important change is really since Friday, 6 institutional investors have sold out, which would again add additional selling pressure. I'm not sure of the size of those positions right now that were actually sold, but again, 6 long only positions have sold out in the last 2 trading days. So again, a lot of selling pressure across the broader market, and certainly those institutions, whether big or small, certainly have an effect. Options, as you can see, the volume yet again under 500,000 on total volume, but the volume was certainly bullish, 1.5 to 1. But if you look at the size of the contracts and more specifically where they're spending their money, you know, whether it's a $34 call or a $28 put or $40 call, you know, it seems to be in and around the price range that we currently are in. You don't see a lot of the, you know, the $140 strikes and the $120 strikes and what have you. I've also noticed over the last week they've added 50-cent increments to some of the weeks, which is an interesting dynamic, I guess, maybe to drum up more business due to the lack of volume. But overall, the volume that is there is more often than not very bullish. Those are the quote, unless you have bad times, you can't appreciate the good times. Certainly, we've had our fair share of bad times over the last, you know, 4 to 6 weeks, holding, buying, whatever you have chose to do. But overall, when this does come back to life, when we do have those big green days, you know, that'll be the medicine that everyone needs, obviously, for the good times, right? Because we've certainly had enough bad. So I want to thank you all for watching. If you found the video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. If you found this video informative, I would appreciate your support. And as always, I hope your life is full of green candles. Thank you all for watching. Take care.